Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. It's Monday, that means it's Macro Monday. We've had quite a bit of news here over the past 2 days, so let's go over that. But first, let's look at, why do we care about the news? Well, what do the inflows say on the institutional side? James Butterfill from CoinShares, of course, puts together this great weekly report, and earlier this year, we, of course, had the BlackRock ETF application excitement, saw some inflows from that, and now we're just back to stasis mode, hibernation. We're seeing some outflows here. Short Bitcoin saw outflows as well, which is good if you're bullish, right? And most of the outflows, as he breaks down, coming from Bitcoin products. Now, if you're wondering, if you're an altcoin enjoyer or a maxi, and you're thinking, why aren't the alts popping off here? Why isn't DeFi seeing any inflows? We'll get to that in a second. And we also had some news of Tether reporting massive profits down from Q1. Still extremely significant, not just on the crypto side of things, but in the banking world, the corporate world, the meat space. Just insane profits per employee. I don't know how many people they have working at Tether. My guess is less than 50. It might even be 20. I don't know what their LinkedIn says, but extremely low overhead in that regard. 72.5 billion worth of US T-bills, which puts them on some rarefied air globally amongst countries that own T-bills. I'll get to that in a second. This is the Tether Treasury as they break it down in their report, their attestation. It's not an audit. They've changed some of these terms in previous quarters. That's why this is so busy, but all in all, still a majority of this being T-bills, money markets, reverse repo, stuff that they can access quickly. If we look at, the percentage quarterly breakdowns, again, most of that is really the safest thing that you'd think of, US T-bills. Certainly not a problem for them because they are on the low end of the curve. They're not holding, what got SVB in trouble. They're not getting effectively called on those T-bills. They don't need to liquidate them, right? We're not seeing massive outflows of Tether redemption-wise. So even if they were holding long duration, they wouldn't be in trouble from a redemption perspective. So in many regards, Tether doing much better than most US banks here on the way they're managing their balance sheet. Based on the Bitcoin amount reported from Q1 to Q2, I don't think that they added anything. They may have added a little bit. It's hard to know because we don't exactly know what price they were using for this in Q1 on which exact day, unless we figure that out. It might be in the statement. You can probably sort of guess what the price would be. But if we look at what we think the Tether Bitcoin wallet is, this is all excess reserves, by the way. This is not dependent on what's backing Tether in the wild. It looks like somewhere around the end of June, they potentially added 1,500 BTC. So this is the unconfirmed Tether Bitcoin wallet, by the way. So they did have a small add potentially. But anyway, still a tiny, tiny part of the entire reserves. And it's not even what's backing Tether at the end of the day. This is just excess reserves. But they are still absolutely just minting money. Profits in the line here. Couldn't find any profits prior to Q4 2022, but they are doing extremely well in this high interest rate environment. Then if we look at major foreign US Treasury holders at 72.5, they are top 20 in this list amongst countries. This doesn't list, private corporations or banks or whatever, but let's say they were a country, they'd be on a significant end of this list for sure. So Tether doing quite well. Before we go any further here, let me talk about today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of the Kraken trading experience with a one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. And if you haven't checked out Kraken Pro lately, they're continuing to add more functionality to this. All this is, completely customizable, very slick, very unique. Haven't been thrown a error here on the Kraken side of things in quite some time, and definitely not been thrown an error since they've upgraded the UI. So check out Kraken Pro with the link in the description of this video. Now, we've had just a deluge of news. GBTC, we got to start somewhere. Let's talk about GBTC, sort of on the legacy side of things. I think the takeaways from everything I'm about to talk about is, why aren't we seeing continuous inflows, right? Why are we only seeing just sort of news-driven excitement? Part of that, as you're about to see, there's just a lot of litigation, a lot of negative headlines, a lot of waiting for resolution on various things. One of those being the GBTC lawsuit against the SEC, which may or may not even result in a GBTC ETF conversion. They may not even get approved. They may have to go to the back of the line. Wouldn't that be the ultimate irony? Them fighting so hard to get an ETF, winning the case against the SEC, and then BlackRock still getting an ETF way before Grayscale. They also advocated for approving all the ETFs at once, which I'll agree with. And they also advocated for Coinbase not being adequate in the surveillance sharing agreement. So they're kind of speaking out of both sides of their mouth here. In any event, they put together this cute little timeline to sort of break down everything that's happened on their journey towards what will very likely be eventually an ETF in some form or an attempted ETF conversion. Fees are still ridiculously high. It's still a roach motel. Stuff comes in, it doesn't come out. It's not exactly rainbows and butterflies over there, but it is a product that is accessible to the legacy world. They also had a letter to the shareholders come out, which I haven't seen publicly released yet. CoinDesk obviously got a hold of it. They replaced their CFO. They fully repaid another loan, right? And again, it's important to look at this and see what are people on the outside seeing? They're seeing just a big mess still on everything, right? DCG still in the process of trying to figure out what it's going to do with Genesis, how it's going to pay back Gemini, right? They say, we're going to resolve this soon. Okay. You go to Gemini's website and, seeking the 7th extension, blah, blah, blah. They still owe the Gemini Earn folks a bunch of money. It's a giant, giant mess. A giant, giant mess. And then also today, a long time coming, Richard Hart getting tagged by the SEC for a whole bunch of stuff, including unregistered securities offering, misappropriating millions of dollars. And the best line about this, is allegedly purchasing a 555 carat black diamond, the largest diamond in the world. And of course, that's the headline that pops up in Bloomberg. But some other stuff people are digging, that he owns at least 703 million of DAI, about 15.5% outstanding. So this may or may not be in the courts for years. I don't know if he can settle. I don't know. The point is, again, another headline that's not exactly favorable on the crypto side of things. We had this one over the weekend. I have to laugh because the Financial Times, FT, absolutely loves to hate on crypto. Now, they're just reporting what the CEO of Coinbase was talking about here, so it's not exactly their fault, but maybe Scott, the author here, is on our side. I don't know. But my guess is when they were putting this together, they just were in a state of glee because they very much do not like crypto. Just keep that in mind. But it appears as though the SEC had asked Coinbase to halt trading of everything except Bitcoin at some point in time, months ago, I guess, when this litigation was happening. But again, not exactly a positive headline. And then we've got Binance sort of trying to figure out its Goldilocks, playing hot potato with regulators. Looks like it got kicked out of Germany. Looks like it's getting kicked out of Nigeria. And then it looks like it's sort of, sorry, that's the diamond story. Looks like it's moving around to Dubai and Japan. Again, it's just constant churn, constant non-positive news. And this I just thought was funny. This is the Bloomberg story on Richard Hart. Clickbaity as it gets probably, but definitely interesting nonetheless. So, Binance in a constant state of where exactly are they? Where in the world is Carmen Sandiego syndrome? And then we've got this gem project that rugged over the weekend on Base, which is Coinbase's ETH layer 2. Certainly not going to make regulators happy. Now, the good news is there's a ton of money moving to Base. So we're not building empty cathedrals in that regard on the layer 2 side of things. But where it's going, things like this, very questionable as far as what's going on with that money. And that, of course, not a positive headline. I don't even think that's hit mainstream news yet, and neither really has this, is the CRV exploit, which happened yesterday. 50 million drained from, I think, 3 or 4 pools on CRV. Some of that's been returned, some of that hasn't. Some white hat MEV stuff in CRV doesn't look so happy still. So just a lot of not so great headlines. Think of all the stuff that happened in 2022, and we're still seeing a toxic soup, a lethal dose of, potpourri and cornucopia of negative headlines. And if we look at the TVL, it's no surprise that we're still seeing just flatline nothingness, right? So Tether's doing great. Real world assets, maybe where we're headed, but CRV, really for me, a pillar of DeFi in my mind. Getting hit with something like that is a pretty big deal. Curiously, there were some people talking about, who could even do such a thing, as far as who has the skill or ability to understand that contract language. And I was sort of speculating maybe ChatGPT helped crack the code on how to exploit that contract. Maybe it was an inside job. I don't know. Maybe we'll never find out. But anyway, back to your regularly scheduled programming of the rest of the macro news. We had a Fed rate hike last week too, by the way, in case you forgot. Inflation has ranged quite a bit here, between 2 and 3%. Good news is it's come back down again. It's very much on the above 3% watch, especially with commodities and energy perking back up again, food prices perking back up. But so far, so good on this aspect of the real-time data. Now we can slice and dice CPI, PCE, jobs data, consumer health, business health, banking health, right? We can look at all that stuff, which I'll do in a second, to maybe tease apart different parameters of the economy. If we look at PCE, personal consumption expenditures, as Nick Timmerhouse is pointing out, it continues to come down. So this is good. We're getting too close to, but not at, the Fed's target. So the question after this meeting, which was pretty much a nothing burger and 100% happened what was expected, what happens now? Do they pause? Do they keep raising? Do they cut? Which is most certainly not going to happen. Probably not until 2024, if that. I think at this point, in order to cut, they'd have to see some pretty negative economic news, which we're just not seeing yet. And if you're on the lower rung of the socioeconomic spectrum, you're probably seeing some hardship, but broadly, things look okay still. So PCE coming down, core PCE, I think that's X food and energy, coming down, but still nowhere close to the Fed's target. So we've got a ways to go still on that, and this would be in the higher for longer camp that the Fed and others have talked about for months and months and months now. And then if we look at other types of inflation, again, depending on how you want to slice and dice this, you can look at truflation and say, well, CPI looks really good, continues to look good, continues to hold down, hasn't quite rebounded yet. Or we can look at other stuff like this and say, well, we got a ways to go, right? So it's really going to depend on what does the Fed want to look at? Do they want to look at JOLTS, which is job openings that, any business can list on Indeed or wherever just to look healthy? That's one optic businesses have used, is let's just have a bunch of job openings to make it look like the business is strong, running healthy. But maybe that's not the case. So in other words, the JOLTS data being much less reliable than maybe the Fed wants it to be. But we get JOLTS this week, we get jobs this week, and then we get CPI on August 10th. Now this is an agriculture commodities ETF, DBA, and looks a lot like gold, looks a lot like oil. Certainly looks bullish. Certainly looks like, just based on the chart, you'd argue bullish continuation here. Certainly not good for inflation should this ETF continue to make highs, right? But if you're in the doomer camp, you're expecting this thing to continue to make highs. You're expecting inflation to start to curl up here. And, maybe this is all that really matters, right? Maybe US debt, which Balaji has talked about, everybody and their mother at this point has talked about, because it's in your face. It's nonstop. Parabolic advance, however you want to think about that. If this were a household, it'd be done. But it owns the printing press. So for many people, maybe that's a false sense of security. I don't know. At some point, you'd think the chickens would come home to roost on this. And that's why so many people have continued to point it out. And our interest payments are also continuing to skyrocket, thanks to those high rates. We're paying Tether, right, to hold our debt. Don't tell the Tether truthers that their tax money is going to pay for the 20 people who work at Tether. But our interest expenses are just getting out of control. So that's inflation, that's the government. Now let's look at businesses. Bankruptcies creeping up here slowly but surely at a higher pace than the past decade. So as Kobayashi puts it here, businesses are feeling the pain of higher interest rates. We can also look at tech layoffs, which are arguably more rate sensitive than other industries. They started to lay off throughout 2022. Looks like it so far has come to a crescendo in Q1 of this year, but it's definitely something to watch for on the tech side of things. Just another segment of the economy. Now, we did have a massive trucking company, Yellow, shut down officially over the weekend here, straight to Chapter 7, I believe, which is liquidation, not Chapter 11. So that's certainly not great news for the trucking business, one of the oldest and largest in the US. We did have UPS come to a deal with the Teamsters. We were talking about wages last week, and these continued strikes, whether it be the SAG-AFTRA strike, the writer's strike, potential strike here. I think there's a strike in LA with the hospitality sector as well. A few months ago, there was a pilots strike potentially. So all this sort of leading to higher wages eventually at some point here. And as we look at unemployment data, I rarely see unemployment data that goes back to the 30s, the 20s. So this is the yield curve with unemployment data from Erie and Timmer at Fidelity. And if you look at the drawdown in unemployment, which we haven't really had any yet, right? We're continuous, just at lows here. So unemployment looks really good, but you'd expect as the yield curve starts to uninvert or become bullish again, that's when we start to see, historically, unemployment pick up as well. As in the Fed's not going to cut until things start to look bad. So yes, is this the most inverted it's been since the 80s? But that doesn't automatically mean the Fed's going to start cutting. And even as we talk about tech unemployment and, Yellow or whoever else hasn't quite shown up on the data just yet. We did have two banking, mergers. This one's an outright failure. In Syracuse, Kansas, it was on the smaller side, relative to the bank failures we've had this year. PacWest was one that was on life support for quite some time. Last week announcing a merger, and I think JPM got a piece of their loan book as well. So they were basically sold for parts. And as rates continue to rise, I just expect to see more of this in the regional side as these banks continue to get squeezed. As money moves into money market accounts, out of bank balance sheets, which admittedly we haven't really seen too much of over the past couple of weeks, but maybe with this recent hike, we'll start to see that again in the next couple of weeks. Moving back to maybe the commodity side, the gas prices side, gas prices for me locally are around $3.90. It looks like the national average is ticking up again. And if you're in California, you're at a $5 average, which is quite rough. So for most people, their economic gauge is gas prices. And if gas prices are high going into an election year, that may be tough for Biden. Now the SPR is already pretty much drained, so I don't know how much more they can continue to drain it and how the government can act to alleviate these prices. I think Exxon has said they expect oil demand to continue to increase this year and the next. And we're still seeing, we want to look at traveler numbers, TSA, weekly averages still at multi-year highs, not quite back to the levels in 2019, but people are definitely traveling again, living their life, whether it's Taylor Swift or Beyonce. There's a lot of talk of, people valuing experiences over stuff, experiences over luxury goods, for example. And that maybe just be natural human behavior when you see something like a pandemic or COVID. Talk about whether the numbers are real or not, I don't care. Just the idea of mass death. People want to live their lives, and that's what they're doing. Going places and seeing things. Now into the consumer here. Again, I said, last week I see one of these charts every week. This is no different from Game of Trades. Saying at the current rate, the U.S. consumer excess savings, we'll say, is depleted. By September, we've got student loans coming up. We've got, I'll get back to that in a second. We've got credit cards, all-time high. Auto loans, all-time high. This is rates here. We've got mortgages at decade highs, right? Multi-decade highs. consumers not looking so great right now. And that's probably why something like this, if we look at consumer sentiment by income, if you're at the top, you've got cash, you've got stocks, equities, you've got rate yield generating accounts, you're doing fine. It's the bottom that sentiment is not looking so hot. Food prices, like I said, continuing to hurt the pocketbook here. And it just doesn't look like things are going to get any better for anyone who relies on, gas prices to stay low, car payments to stay low, housing, which Zillow thinks 80 regions are going to have a 7% gain over the next year. So that's eventually going to bake into the housing numbers. And, housing is an extreme lag in the CPI, as people have discussed, as I've discussed. So we won't see this, if it comes true, we won't see this baked into the CPI for, months and months down the road. But Zillow's forecast extremely bullish on housing prices. So if you're a little guy, you're just continuing to get squeezed at every single corner. And we can see that likely in the retail sales here. We're just sort of, coming back to the equilibrium. COVID stimulus, post-stimulus. These probably continue to go negative, I'd imagine, and just sort of hold at zero for quite some time. And along with debt, this is the reason why charts like this is why Bitcoin exists. What happened in 1971, right? I mean, this is the purchasing power of the dollar just getting eroded. I don't like that they're talking specifically politically about one party or one president, because it's not. It's everybody. We'd get closer to a solution if we'd agree on that fact. Has it exploded in Biden's terms? Sure, but it's exploded in other places as well. But price of a Campbell's condensed tomato soup can continues to increase here. And the argument for this being they can't shrink it, they can't apply shrinkflation to something like this. So on the lower end of the spectrum, continuing to see the dollar just being eroded in many facets of life. But, the good news is S&P at multi-month highs, almost at an all-time high. I really highly doubt it pushes through 4,800, but there are still very few capitulated bears. There's still quite a few people who remain bearish. Up here have stayed bearish for the entirety of the year, despite the S&P being up, 20% or something like that. From a technical perspective, continues to put in bearish divergence at a yearly pivot, and it's within the take profit zone of the previous consolidation. So wouldn't surprise me to eventually pull back a little bit here. Wouldn't surprise me to go sideways. I think the biggest surprise to me would be just mega all-time highs through 5K, because back to the election, what's going to be more important here for the electorate, the voting populace? Is it going to be the S&P at all-time highs, or is it going to be gasoline at back to $5 on average in the country? $8 in California, whatever it was. Sure, maybe bread's $10 a bag, but the S&P's at 6K. I don't know. Just based on technicals, this doesn't look like anything I'd want to touch up here for me personally in my own trading style. So it was a long one, tons of news, tons of data points. That's all I have for this one. Like, dislike, comment, share, subscribe. Happy trading.